Well, Tesla out with first quarter results, clocking its first revenue drop in 4 years. The EV maker reported both a revenue and earnings miss, but the stock is soaring today after the company said it would accelerate the launch of more affordable vehicles. Despite today's pop, the stock right now down over 30% this year. And it's becoming popular in the options market. Tesla's short interest is up 30% from the beginning of the year. Here with more, we've got Kevin Paffrath, who is known as well as the popular YouTuber Meet Kevin, and a long-standing Tesla retail shareholder as well. If my memory serves me correctly, as of this morning, you've also trimmed your position recently. Take us into that decision-making, Kevin.
Yeah, absolutely. Thank you so much for having me, by the way. So what I did before earnings and before we got our Q1 deliveries numbers is I thought this would be a perfect time to tax loss harvest some of those higher acquisitions of Tesla shares. So I sold down in March up to the earnings, which we just had yesterday. And so now the debate is it time to rebuy Tesla? And I think investors should be looking at 3 good things that we heard from Tesla and 5 bad. And I'll keep it short. I'll go through them quickly. Margins up in the face of price cuts. Amazing. Even with credits removed, this was a really good positive shocker. They've clearly got efficiency in manufacturing, and that's the reason you want to invest in Tesla. Big fan of that. So we like that good. We got a very hope-filled Elon, which was also very good, and we have the hope of new vehicle models coming. Whether we actually get new models or they're just refreshes, we'll see. But there was some bad, and so we kind of have to weigh the good and the bad here. One, we just added basically 9 lifts to our valuation. The ride-hailing company Lyft, we added 9 of them to our valuation overnight. So I think we might be adding a little too much hope there. We've got the risk of the share comp plan for Elon Musk. Is he going to get paid? If he doesn't get paid, is he going to end up taking the Optimus robot, the humanoid robot, somewhere else? We've got the negative cash flow risk with the AI investments. That's why we're no longer building new gigafactories. Giga Mexico is basically on hold. And we basically just took away the hope that the 4680 battery cells are truly the next greatest innovation, which is the same thing Elon did with Dojo. That, hey, we're doing our own servers, but now we're going to use NVIDIA chips. Hey, we're doing our own batteries. We're just going to use cheaper Chinese chips. So there are pros and cons here, and I'm sitting here wondering, is it time to rebuy? And I just haven't figured it out yet.
Is a more affordable, soon-to-be announced or unveiled or uncloaked vehicle that they talked about on the earnings call, is that a pro or con in your perspective?
It's a pro if we can actually get a new model, but they purposefully dodged that answer in the earnings call, leaving the door open to the possibility that more efficient vehicles are just versions of the Model 3 and Y that are manufactured in a different way. So for example, a steer-by-wire on a Model 3 or Y, or using a 48-volt architecture to sort of bring down some of those costs without actually introducing a new model. And so investors sort of have to evaluate, okay, are we going to get new models that are going to get us to vehicle growth, or do we just forget vehicle growth for a moment and just hope that full self-driving is actually going to produce the revenue we think it might? Keep in mind, right now we've got a take rate of about 10%. It'd be nice to see that around 20, 30%. But will the cost of FSD come down to offset some of those gains? Those are some of the other things to value. Now, I just want to be clear. I love full self-driving, and I think in the future, everybody's going to use full self-driving, but we might be a few years away from robotaxi. So pricing that in, also hard. And that's why when I look, I go, oh, wow, up 12%. It's still lower than where I sold my shares. I sold some shares between about 171, 175. So I could still buy in at a discount, but I'm sitting here wondering, are we really that close to full self-driving yet to start pricing this in? In other words, full autonomy? I'm not convinced of that yet.
What's the dial mover that would tell you it's time to get back into the name?
I think we've got all of 2024 to set an EPS floor, and so there's plenty of time to buy, in my opinion. And then the dial mover is vehicle growth again, where we actually get back to going from 1.8 million vehicles to 2.5 to 3 to 3.5 to 4, 5 million vehicles. That's the growth we need, because the more vehicles we get on the road, the more Tesla can make from full self-driving, the more data we have to increase that moat for robotaxis, the more potential robotaxis we can have on the road, the more cash flow, positive cash flow they have with good margins to invest in other initiatives like the Optimus. My concern is with this negative cash flow we're facing now, we're really cutting out other initiatives. And I suspect that a lot of them are going to take the back burner. They're suggesting that they're starting production of the factory to build the semi-truck, but they've said that for 5 years. And they showed us a picture of a graded lot. But as someone from a real estate world, I know that we grade lots just to keep the weeds in the city away. So I have a lot of skepticisms and I have a lot of hope. I'm just not sure how much I could value that hope at right now.
Hey, Kevin, just lastly, while we have you, and I would have loved to ask a question about the Cybertruck, I actually need to pivot here because of some breaking news that came out during this hour from the Biden administration that may influence you or many of your colleagues as well in the kind of influencer and content creator category also, where there's going to be more of the perhaps onus on a potential buyer to come forward and buy TikTok, or else it will not be allowed to exist here in the U.S. and a U.S. owner specifically, I should mention as well. What do you think that does for a lot of the content creators like yourselves, and where do you shift to if not on TikTok?
I would be surprised if somebody didn't come around to buy it, because quite frankly, if TikTok was going to get 100% shut down, you could take the value of TikTok in America and just set it to 0. So anything above 0 is going to be a win for ByteDance. And quite frankly, I'm sure they have plenty of friends with American passports who could buy this company and pretend to be different. Do I really think it'll become truly, fully independent? Probably not. Will it get bought up? Very likely. As a creator, it's definitely an uncertain time, because there's always that chance that it's completely gone and removed from the App Store. And even just a period of time, this is the biggest risk. Even if it just disappears for a few months, as soon as people get the routine of using that kind of platform out of their habit of opening their phone every time they go to the bathroom or they're in the kitchen to get a coffee or whatever, as soon as that routine turns into, okay, now they're on YouTube Shorts or they're on Instagram or something else, that definitely hurts creators on TikTok. So the worst case scenario, I don't think, is that they're gone forever. It's just that if they're gone for a window, that unwinds people's habits, and that's the worst thing that could happen.
Kevin, really insightful. Thanks so much for the time. Really appreciate it. Kevin Paffrath, who you can catch on YouTube. Meet Kevin, of course, and financial analyst. Appreciate it.
Thanks for having me.